Hey guys, good morning, good afternoon, good evening. Printer here, and welcome back to another YouTube episode. Now, today we're going to making. I'll try to make this video as effective as possible. Yeah. So we're going to discussing about entries. All right. We're going to be discussing about entries, and yeah, maybe another time we'll speak about bias, but today just entries. Now, before we go into entries, right? There are different things that you need to know, right? Because I pick my entries there from what's it called? Using key levels, right? I like to use key levels for my entries. So you need to get yourself acquainted and brought up to speed on key levels first. So if you're just new to this YouTube, yeah, you need to know that there are different kind of key levels that I use. Right? We have the um let's start with this. So we have different kind of key levels. And we have the same character key level and different character key level. Now for the same character key level, right? For the same character key level, basically means that two candles of the same orientation, right? So that means you have a bullish candle and a bullish candle, right? Side by side, or a bearish candle and a bearish candle side by side. This can give you a key level. While the different character key level basically means what? Two candles again of different orientation. So you have bullish candle first, bearish candle next. So when we have a bullish candle, let's say we have a bullish candle and a bearish candle side by side. So let's get this one green. So let's say I'm changing this thing. Change the opacity. So when we have something like this here, when you have something like this, this tool can give us something called our A-shaped key level, right? A-shaped key level. So this area right here, basically where the first candle closed and where the second candle opens, can give you a key level, right? So all key levels basically from where the first candle closed, the close of the first candle and the open of the second candle. So that line where they intercept is your key level. Now the second kind of key level is the where you have your bearish candle, and then you have your bullish candle side by side. So where the bearish candle closed and where the bullish candle opens is another kind of key level. Now for the first example, right, that's called an A-shaped key level. A-shaped key level, and for the second example, we have what? The V-shaped key level, right? So for the A-shaped key level is basically what? Some kind of a support key level, a resistance key level, where price is expected to sell from, right? It's basically like resistance. While for the V-shape is like a support where price is basically bounce from or buys from, right? So and why do we call this A shape and a V shape? If you go to your, I don't like all the videos take too long. If you go to your what's it called? Your line chart, right? You can see this is called an A shape key level. You can see that this key level right here, you can see it's formed by what? Two candles, bullish candle and a bearish candle side by side, right? Same thing with this one. I'm trying to find. Okay. So the same thing with this one right here. So this is what? This is a V-shaped key level. V-shaped key level, V-shaped key level, V-shaped key level. Can you see it? They all take the shape of what? Of V. And you can see they are always formed by what? Two candles. First the bearish candle and second the bullish candle Same thing here, bearish, bullish, bearish, bullish, bearish, bullish, and all these, they form what? They form V-shaped key level, basically the support key level, right? So that's for that. The second kind of key levels are basically the what's it called? The open close key level. Now, open close key level is basically when you have two candles of same orientation, yeah. So let's say we have a bearish candle and a bearish candle side by side. So where the first candle closes and where the second candle open, that will give us a what? An open close key level, right? Same thing with the bullish open close. So that first one is called the bearish open close. The second one is called what? The bullish open close. So where the first candle closed and where the second candle opened, that's your key level. That's the open close key level, right? That's the open close key level. What the fuck? So that's your open close key level, and then it's for your bullish open close and your bearish open closes. Now for the first one, which is the bearish open close, this key level is like what? Like a resistance also for sales, while this one is for like a support for buys, right? And this one cannot be seen on the line chart, right? You can use you only use this one for on the only use this one on the what? On the what's it called? Only use this one on the candle chart, right? On the candlestick chart, right? Something like this. So this is what is a bullish candle, is another bullish candle, right? So basically, it's also as a what? As a support. You can see price coming there to bounce off from there. Let's try and find the bearish open close. Yeah, this is a bearish open close. Can you see bearish candle, bearish candle? This is what? Your key level. So that now we've got that out of the way. There are other kind of key levels, right? Other kind of key levels where we have where price actually works from. Now we have something called violated levels, right? So basically, if let's say if an A-shaped key level now, let's say we have an A-shaped key level right here, something like this, right? And the market violates it. That A-shaped key level now can be used for buys, right? It can be used for buys. That is like basically what like resistance turned to what? Support. The same thing applies for the V-shaped key level, right? It should be used for buys, yeah, but sometimes market will violate it and market can use that level for what? For sell. So that support has now acted as what? As resistance basically, right? The same thing goes with the open close. So you have your open close key level. Market should do what? Should do what? Should sell from here, right? But sometimes market can just do what? Can just what? Violate that level, and then that level can be used for what? For buys. The same thing for this open close here, right here. Market can what? Can close below it right here, and that level will be used for what? For sales. It's as simple as that, guys. So I'm just trying to like introduce to what I use for my entries before we go into the entry itself. So that is that about the open close and the violated levels, right? So let me just show you a couple of examples. So we have this right here now. Now if you look closely, what do you see here? I can see what this is. What this is a V-shaped key level, right? A V-shaped key level. Now that V-shaped key level, right, should be used for what? For buys. Should be used for buys right there. Should be used for buys. Then what type of market what violated it? As soon as market violated it, market came there and used for what? For sales, right? Good. Market use that level for what? For sales. Now look at this level again. Now look at this one again. What kind of key level is this? These are now what is a V-shaped key level right here. Right. If you go to your line chart, market did what? Market violated it. Can you see that candle close below? Right. And then what happened? Market use that level for what? For sales. So it's as easy as that. So let's try and find a for buys. This is a very easy one. Right here, you can see this is an H-shape key level that should be used for what? For sales originally. But then as soon as market violated the key level, market used the same level for what? For buys, massive buys to the upside. Right? So the most important thing is actually you do what? To work on what? Identifying structure, identifying your order flow. And once you can identify these things, you can say, okay, you know what? If you can know, okay, market wants to buy, let's say you know market wants to buy, all you need to do is wait for market to violate one of these sell levels and use it for buys. And the same thing goes for sell. Let's say you have identified, okay, my bias is what? My bias is bearish. You can identify that, okay, market is bearish, right? I want to sell. You just wait for what? For the buy levels to get violated and use those levels for what? For sell. It's as easy as that, right? So back to what the topic is today, which is executions and everything. So I've spoken about open close key levels, about volatility levels, spoken about H shape and V shape. And I've spoken about the last one is going to be the QM. Now this QM is one of my favorite tools when it comes to key levels, right? And I know it's the same. It goes the same for most key level traders out there. So looking at this here, we're going to say that sometimes we can have an H-shaped key level right here. Right now, this level should be used for what? For sales, right? This is like a resistance, right? And then market to do what? Market to violate this key level to the upside. Now, normally you should use should be used for what? For buys now, yeah. Then market to violate it again, almost instantly. And then what happens? This level now, these two candles now have created another what? I've created another key level, which is another H shape. Right? So market has created what? A shape here, A shape here. So definitely market needs to come into this level and sell. That is the idea. So definitely, if you want to draw this line way, you're going to be seeing this A shape, market comes into this, that main A shape that got violated twice to the upside and to the downside. Can I use for what? For sell. Do you understand? So basically how it works. The same thing goes for the V shape. So you have what? Your V shape key level right here. Market does what? Market violates it to the downside, right? And the market closes inside, right? So definitely you're having what? We're having what? If you draw this out, V shape, that's the first one, right? And then the second one, which is just below it, right? Something like this. So this is also going to be having. So that second one is this, right? And then you want to basically come in here, that first level, and buy from there. So that's definitely everything I'm going to be using today, right? So now coming to entries now. For entries, that different things that I need to look at for, right? Okay, so let's go on. Let's continue. So I want to define another thing here, which is validation. What validates what makes me start looking at for entering. And the first now you need to get into your mind that, okay, you need to be able to identify, okay, my bias is this, my bias is that. All right, you need to identify your bias. That's the first thing. Now, this is not a bias class, obviously. This was purely entries. So, once I was my bias, okay, I want to buy. Now, let me give you a tip now. Okay, I'll say, okay, I want to buy. What are the things I need to see? I will also mark out my hour time frame key level. So, let's say this is a daily key level now, a V-shape key level now, on the hour on the daily time frame. Let's say this is a V-shape on the daily time frame. Right, this is a V-shape key level. V-shape key level on daily time frame, right? And price comes into that V shape, right, and let's say it starts to reject something like this. It starts to reject, right? Start to reject. So on the 4 hours, what do I want to see on the 4 hours? I just want to see what a key level that gets broken to the upside. That's right. A key level that gets broken to the upside. So I need what? I need a breakout. So once I get this breakout, right to the upside, and now looking, my bias has now be, or now have what in confirmation. My bias now has a what a confirmation. So for every entry I want to take, I need this breakout. So if this is on the 4 hours now, yeah, though I want to do a little bit of practical. If this is on the 4 hours now, yeah, I'm going to be looking at what? On the 1 hour. I'm going to be looking at this on the 1 hour. So once I have this, good. So this 1 hour confirms the 4 hours bias. So I buy. Right, I buy. It's as simple as that. Right? It's as simple as that. So daily rejection for a break. And once I get this now coming to entries now, what do I look at for? Now, there are two ways I enter the market, right? Two ways I enter the market. At the beginning of the bias, let's say I verify where my bias needs to be, I verify my target and everything, blah, 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 right? And my bias is saying buy to, so let's say my bias is telling me buy, Stanley buy to somewhere around here now. Right, this is my target now for the buys, and I've verified this on my daily or H1 on 1 hour, no problem. The first for the first move, right, which is the origin. For the first move, which is the origin, I always use two things. I call it the origin entry. Right, the origin entry it takes two things. What is that? Origin entry basically says, Stanley, you have entered from where? From the apex or what? QM level. Now, remind you, I told you guys that I've explained to you guys what the QM entry looks like, right? Now, for apex basically means what? Your normal A shape, right? Your normal A shape or your V shape. So you know your normal A shape or V shape. So you know your A shape or V shape now. I've not explained the QM. Let me just show you an example of the QM. Now this is a QM entry. It's a very clean QM entry. Can you see? A shape, violates it, breaks, market comes back to that level and sells from there. Right? Can you see? So let's mark it out. Let's mark it out a little bit now. Mark it out QM. So market came there and sold from there. Can you see? From the QM. Clean stuff. Let's look for another example. So this is a good example right here. So this is a good example right here. So what do you see here? I see what? A V shape that got violated by this V shape and a big or short to the upside. So marking at that level will give us our entry. So let's say I want to buy now, right? You can see market comes to that QM multiple times, right? And then we buy to the upside, right? So as simple as that. It's just as simple as that, basically. Let's look for another one. Look for another one. Yes, I think you guys get the point. Yeah, so we'll go on the practical soon. Don't worry. So let's back to what I was saying. So once I'm starting the move, right? I call it origin entry, right? Origin entry, right? Apex or QM. Now once I'm in the move already, right? And let's say market has not hit my target yet, and we'll have some expansion candles, right? Also expansion candles around here or something. I can just use what? Violated levels to continue to move into my target. It's as simple as that, guys. It's as simple as that, right? So let's do some work now. Let's do some work. So I've explained to you guys now the QM or the A shape. I've explained to you guys the QM, the apex. I've explained to you guys the V shape, the A shape, the open close levels and everything. Now I told you guys for at the start of the move, of every move, I like to use what? the origin entry. That's one of the entries I will give you guys today. Origin entry. So let's look at some examples now. Now this is silver here. Let's do a little bit of study. A little bit of study right here. So now this is silver. Now this, if you go to the daily time frame on silver, we have this on silver. Now what is this? This is a very nice what's it called? Market swept this low. So I'm actually bullish. Like looking at this, you're actually bullish. We've completed all these sell targets, right? So I'm actually bullish on this silver. And at least I'm expecting what price which swept this candles low. I'm just trying to show you guys how I'm from my bias at the same time. So I know it's not a bias video, but at the same time, what can we do? Now watch closely. Now what do we have here? I've tried to find out, okay, this is my target. Minimum target though, right? Not like I'm going to identify that, okay, you know what? This is my minimum target. Right? Minimum targets. Now what can you see here? I can see, okay, this is what? Bearish candle, bullish candle. What does that mean? It means that we have what? We have a V-shaped key level because the bearish candle comes first. We go to our line chart. Our line chart, what do we see on the line chart? Boom. I mark that V-shape out, and I wait for price to come there. Right? That's the what? This line that I drew out right now. This line that I drew out right now. This line that is here right now is what? Is a daily time frame. The daily time frame key level, right? Daily time frame key level, right? The same way we did on that theoretical part. Now, what do I want to see here? I want to see what? A rejection from that level and a breakout. Now, what do we have here? We've gone to that level, rejected, and if you look closely, just look closely. What do we have here? We have what? An A-shaped key level that got what? Violated. So we now have what? A breakout on the 4 hours. Once I have this, and I know, okay, you know what? This is my what? This is my trading range. I look to what? Execute inside this range now. That's the reason how can I find my entry inside here now? How can I find my entry? Can I go to like 2 hours time frame? Now the 2 hours time frame, what do you see on the 2 hours time frame? I will go to my line chart. I told you guys what? Apex or what? So it's origin entry. Apex or what? Apex or QM. Now this is my apex level, which is my what? V-shaped level. And this is my QM. Do not forget, this is my what? My QM. Do not forget. I use QM because this level, right, got violated once and got violated twice. So that level is a what? It's a QM entry. The QM level rather. Now we can use that level for what? For or buy. This is my internal range, obviously. I didn't want to talk about internal range yet, but maybe in that class. There's no fair value gap to confirm this stuff. Now, price market comes into this level. Now for stop loss, you can look at this candle right here. Mark it out. You can do this. Right, and you target right here. So it's like a 5-hour trade. Or you can use the full listing. The usual one works for you. Alright, let's use this. So we're good to go, right? So let's play this forward. So following this on the 1 hour time frame too. So let's put it on the 1 hour time frame. So and play it forward. So let's see. This was a trade that we took. Now that is brilliant, right? That is brilliant. And that's your take profit smashed, right? That's our TP smashed. Beautiful 5.3 hour trade. Right now, market doesn't end there, obviously. We'll wait again. So let's go to the daily time frame. Now the daily time frame. Okay, look at our daily levels. We have this daily level, which is our V shape. We have this level. We're obviously waiting for the one who will give us our breakout. That's all. That is all that we're waiting for. Right, finish. So obviously you need to work on your bias and everything, but for your entry, this is all I do for entry. To confirm the level. This is all I do to confirm the level. Now what is this now? This is perfect. And what is this now? We've come into what? A daily level. Now watch closely. Watch closely. This is what is a daily. Can you see the daily level right there? This is our daily level. This is our daily level, right? This is the daily level right here. Now market has done what? On that daily level, market has done what? Has given us a what? Watch closely. Watch closely. Go to your line chart. This is beautiful. What do you see? These are our breakouts. Confirm, right? Confirm. Now, where do can we buy to? You can buy to this high right here, minimum. Right, and I told you guys that we can use what? QM or Apex. Now, where's your Apex level? Where's your QM? This is my what? QM. This is my Apex. So we mark out the two of them. 1, 2. So obviously, I like to use the one closer to. I don't like missing entries, right? If you use this one, no problem. You'll be looking at scoring around 11 hour, almost 12 hour. If you use this one, this is around 5 hour, give or take. Right, so let us use this one. Right, I'm not really good to trade on. Triggered. We're in profit now. Watch closely. We're in profit now. Some of you guys may ask, okay, Stanley, I don't know. Let's say we use this one. Let's assuming we use this one now. I'm assuming we use this one now. Okay, and you guys say, oh, miss entry, blah 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 blah. Right? I'm saying, oh, miss entry, blah 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 blah. I really don't care about miss entries, because once I get this breakout, now watch closely. We have what? A 4 hours rejection. This is a 4-hour level, right? A 4-hour level. Market come to that 4-hour level, rejected, and giving us a what? And giving us, watch closely, and giving us a what? And giving us a breakout. Right? It's a breakout, confirmed. Now, what I tell you again? Origin entry again. What I tell you? Origin entry, right? I can use what? Apex level. Apex is what? Origin entry. Origin entry is what? Apex or what? QM. Now, is there QM at this stuff here? No. Can we go to the 2 hours time frame? Now, the 2 hours time frame. Now, where's our QM? This is our QM right here. Right? It's our QM right here. Right? We cannot use that level. Now, this is now our what? In case you miss this first one, no problem. You cannot use this right here. But if you're obsessed again with this, you can use this one, obviously. You put it here. Stop loss. You target here. This is what? A 5 hour. Assuming you miss this one. You miss the first entry. Let's say you pick the first entry. The first entry is running already. You look for your second entry. That is what you go to use again. Right? Market triggers. Right? We are moving again. We're improved again. Right? And you can watch closely. I haven't forgot that I played it too fast. Sorry, guys. I played it too fast. Now from that level, that our 4-hour level. Watch closely. This is a 4-hour level, right? This is a 4-hour level. Right? This is a 4-hour level. Market went to that 4-hour level right here. Rejected and give us what? If you go to the 2 hours time frame, give us a what? A breakout. Give us a what? A breakout. Now what I told you again, guys, right? Origin entry. What do you use for? QM or Apex. Most of you guys to focus on the word QM. QM is very, very good. Now what I use this a QM? It's the same thing. You have your V shape, validated once, validated twice. That's your QM entry. right? So what do? That's your level to buy again. All right, to buy again. That's your level to buy again. Keep your stop loss here. Same target, guys. Same target. Let's target 3R for this one. 3R, okay. Right, we play. Triggered and profit. Right, 3 entries, guys. 3 entries, and you make this shit. You will milk this shit. Can you see? Simple entry model that you can follow. Very, very simple entry models that you can follow, right? And you can milk. So far you know your direction, you know where price is going to. You can also keep using this stuff. Back to back to back, the chop on the go, chop on the go, chop on the go. Let me show you guys one more. I think I took sales on GPUSD, on EUSD, one time like that. So let's look at some of the executions that I took. So let's look at this right here now. As some of you guys know this pattern, obviously. Now let's say we see this now, yeah. Now this is a fair value gap. This is a fair value gap. I like stuff. I'll talk about fair value gap later on. We are bearish, very bearish on Euro USD, and market has given us this pattern. Now we don't know where we are going to. This is not a bias class basically, but we know market has sub this high, this candle's high. They're coming for this candle's low, right? It's simple stuff. Now how do I enter? I told you guys I look for my confirmation. Now what do I look at for? I look at for higher time frame mitigation, right? Now this is a what? This is a key level right here. Now this is a key level right here, right? This is a key level right here. If you look closely, that level I marked out is what? That is an open close. Let me zoom in properly. Right, this level right here is an open close. Right, I got validated once and validated once here, validated another one, right, twice right there. Right, so that's like a key level right there. And market went to that level. Right, market went to that level, tap that level. So we have what? Higher time frame mitigation, and we have 4 hours breakout. So this is a breakout right here on the 4 hours. So how do I know this is a breakout? What do you do? What do you do? You go to a line chart. Let's mark this out. This is our breakout. Confirmed. So my bias is what has been confirmed. I look for what? Sales. So I told you guys what? All I look for my entries. I look for what? I look to using what? QM or what? Apex. Where's your Apex level? Apex. Where's your QM? My QM. We actually have 2 QM, but I like to use the closer one. The one is closer. I'll not miss entry. Do you understand? So that would be this thing. So this is my entry. This is liquidity basically. This will be my entry, and this will be my stop loss. We know where price is going to, dumping straight to this low. This is a 4-hour trade. Let's play it. Triggered or in profit, dump, bye bye. Now I told you guys that I have 2 entry this thing that I use. That my most popular one is the what's it called? Is the origin. But I told you guys that the second one is the volatile levels. I like using volatile levels for continuation. If you look closely right here, you see that what market went to this level, rejected, give us a breakout from this level, and that level is a what? That is a V-shaped level. That should be used for what? For buys normally. Should be used for what? For buys. Right? Should be used for buys. You can see our price back to that level. Use it for what? Sales. So this is like type 2 of entry. You can see market just dumping. Very, very simple stuff. Right, let's do one more. I took on BTC sales. I think the other day, BTC sales the other day. I took BTC sales. So let me just explain this one to you guys. So now this one is a very simple one. If you go to daily time frame, right, what do you see here? I see what higher time frame mitigation. Market tapping to this there's a fair value gap right here. I did explain this to my guys in the inner circle. So now, what do you see again? So we have what attack from mitigation. We have my pattern again that I like to use. Very effective stuff. Sweep of this eye. Target is this low. So we now know where we are selling. Where we now know our buyers and we were selling to. Right? We know our buyers and we were selling to. So what do we do now? I've seen this. I need to see my my forward break. Do we have a forward break? Yes, we do. And you can see I'm staying on the higher time. I'm not going to the 15 first. Some of you guys ask me, oh, 15 minutes, 30 minutes. I don't care about those time frames. If you want to stay long in this craft, you need to avoid noise. 15 minutes, 30 minutes, they're not really noise per se, right? They're not really noise per se, but they're just like, I don't really fancy them that much. Do you feel me? I don't really fancy them that much. So, yeah. I don't really fancy them that much. So, and then, yeah. I don't really fancy them that much. Well, if you like this thing. Now, this entry right here, this one right here, I use the closer. I use the closest key level. I didn't use the what's it called? I didn't use the origin entry. I used the type 2 entry on this one. And now what do I mean? Now this is the 4 hours, right? This is the 4 hours right here. Now this 4 hours, where's your internal is liquidity right here. Now if you look closely here, there is no QM. And this apex right here is actually it's very far from where I want to enter from. So basically, the entry I just used, I looked at the nearest what's it called? Nearest level on the 2-hour time frame. I look at the nearest level on 12. Now look at this right here. Look at this. Bam. So I also use this closer one right here. Right, this one right here. That got violated 1 time, 3 downside, 2, and then now the beauty about this is that yes, you have missed entries sometimes, but overall you should be good. Now if you are to use our origin entry type model here, it should be your entry and you miss it, which is fine. But try to use the closest key level, especially when the difference is not that much, right? So when the difference is not that much, so this will be your entry. So will be your entry. Stop will be here or here. Anyone works. So for your targets, which is here, and you dump it 5-hour trade. So very simple stuff. Very simple stuff. So if you guys learn something, right? You can just drop me a follow, subscribe. And if you want to join my free training community where I drop setups like this, I drop educational materials. I also host free classes every week, like every single week. We host free classes, right? You can just use the link in the description of this video. And yeah, you can also follow me on Twitter, Iceland Capital. Anyway, guys, hope you learned one of those things. If you learned one of those things, guys, like and share. Peace out, guys.